Good evening, everyone. We'll start shortly. All right, so welcome all in the weekly webinar of Week Ahead with Religare Technicals. So in this webinar, we talk about markets, how the markets performed during the passing week, what we are anticipating in the coming week for both Nifty and the Sensex, and some of the stock ideas which should be on your radar, alongside with uh, some of the sectors which performed well and the sector that you should be focusing on. We'll end the webinar with a quick feedback poll, and then lastly, the Q&A button which is there on your screen. You can use that to ask any question related to the webinar, anything related to the markets in general, means any sector. Stock specific queries we generally avoid to end this webinar on time. And let's start with a quick disclaimer now that they view the information which we share during this webinar is for the information purpose. It's not a trading or investment recommendation. So before making any decision based on the information shared, please check with your financial advisor. Now, first thing first, the performance of the benchmark indices. Both Nifty and Sensex gained over 2%. They reclaimed their record highs, but for a brief in today's session. Means by the end we surrendered most of the gains, and still we could manage to close with 2% kind of gains for both Nifty and Sensex. Across sectors, we saw the participation where energy, metal, auto, realty, and pharma they were the top performers, while media and FMCG they were slightly in the back foot. They have ended with modest losses. Coming to the top 5 gainers for the week, we have 2 names from the energy basket, BPCL, ONGC. Then we have Adani Group of Stocks, Adani Ports, Adani Enterprise, and Power Grid also, which made it to this list. On the losing side, post numbers, L&T witnessed sharp decline, nearly 6% kind of a cut. Then we have Titan, ITC, Bajaj Finance, and UPL. So UPL is a consistent to this list. Rest of the names, they are witnessing profit taking. Bajaj Finance, yes, we have seen a fresh breakdown. So now what we are anticipating in the coming weeks, so this is the daily graph of Nifty, and this candle, after making a new record high on Friday, we have ended almost prior to the day's low. So it's not a very, great close for the index. And keeping this in mind, the view that we have been discussing, that market should spend some time around these current levels. So in short, if any level that one should be focusing on the higher side is 22,150. If we manage to cross and sustain above 22,150, we are set for the next level of the up move, 22,500 and maybe higher. Otherwise, this sideways tone will continue. Otherwise, we'll see this consolidation continuing in the index. First support, this yellow line around 20 EMA, which is around 21,550, 21,600. That would be the first area of support, and then the previous swing low, which is around 21,100, 150. So what all the indications that we have? Indications are in the favor that consolidation will continue. Nifty reclaiming 22,150 seems unlikely, at least in the initial session of the week. So it's more like consolidation bias continuing in the index. Good part is, barring banking, other sector majors, they are witnessing participation on the rotational basis, like Reliance, IT majors, auto majors. They all are contributing to the move. It's just that banking isn't slightly on the back foot. So the tone looks positive. We are largely focusing on buy side of the ideas, but yes, when it comes to stock specific move, we are seeing movement on both sides of the market. It's something to do with the earnings also, but largely we are focusing on buy side of the ideas amid this consolidation also. So that should be the way forward. But the level to remember is 22,150. Now coming to banking. So banking is the only reason that why we are not seeing consistency in the trend, or why we are seeing this consolidation. So this volatility that we are seeing, for almost 2-3 weeks now in the banking, a sharp decline followed by sharp covering. But today being a bad day for banking means we couldn't hold or sustain above this red line, which is close to around 47,000 mark. So this indicates that banking is also likely to remain range bound, and until we reclaim 47,000 mark, the tone is likely to remain slightly on the negative side for banking. So banking, on the other hand, looks comparatively weaker to us. So we are not focusing on aggressive buy ideas. Yes, some of these PSE counters are exception, wherein we are seeing consistent buying. They are making new record highs. SBI, Canara Bank, Bank of Baroda, Bank of India. In fact, the laggards, which were not participating in it earlier, they are also witnessing decent traction. But private banking majors, they are still struggling. So Axis ICICI, anyways, they are doing comparatively better. But SDFC, Kotak, IndusInd Bank, they are still facing pressure on every rise. So banking is something that one should be cautious, and the preference should be given to the PSU banks if you are looking for any long trade. And once we cross and sustain 47,000 mark, then this gap that we had on the daily chart, this zone, that would be the area of next resistance. 47,700, 48,000 would be the zone where it might be heading to. So until we break 47,000 mark, maintain sideways to negative tone in banking. Now, stock specific, where one should be focusing on. So the first name, Kenfin Homes, we have discussed this idea in past also once. And it's not a daily or a weekly graph, it's the monthly graph. So why we are focusing on Kenfin? See, after this consolidation, this broader consolidation range breakout, it's been hovering in this very narrow band from last 8-9 months. And now we have certain indication that yes, it might make a serious attempt of resumption of the trend in the coming weeks. So in case if there be any move, it could be very sharp, considering the lack of any price action and this very narrow range consolidation. So Canfin Home is one candidate that should be on your radar in the next week for long ideas. Next, metal as a sector is holding strong. Majority of the stocks are participating within the sector. Tata Steel within the steel pack, we have not seen much traction yet, but it seems like that it is set for the next leg of the up move or a new record high in the coming week. Why? Because a steady uptrend post the trend reversal, and this buying pivot formation on the weekly chart above the short-term averages. A marginal push above this previous swing high around 142.43 would trigger the next leg of the up move, and a newer high in the stock is something what charts are indicating. So Tata Steel should be also in your radar for the next week. And since we are saying that it's not outrightly a bullish market, we are still seeing certain stocks, certain sectors being under pressure. So within the FMCG space, both ITC and HUL, they are reeling under pressure. This is HUL daily graph. Why we are focusing on the negative side in HUL? Because first breakout attempt from this consolidation range, which faded. Then it slipped below the major averages also. And this time, after retesting the moving averages ribbon, it failed to hold. And now it's again witnessing decline. So this indicates a possibility of further profit taking or a decline towards a newer low, maybe close to around 2,300 levels or maybe lower. So this is one stock which can be on your radar for the short idea. So net Nifty, Bank Nifty consolidation but Nifty looks comparatively better. 22,150 is something that we are eyeing. Once we cross and sustain above that mark, then we'll be outrightly bullish. We shall be focusing more on the ideas or the rate sensitives which are aggressive in nature. In the interim, maintain stock specific approach, maintain position on both sides. Banking is something that we are recommending to avoid until we reclaim 47,000 mark. Within the banking, PSU banks are comparatively better, but stick with the top names because when we see correction, the laggards usually witness sharp cuts. Stock specific ideas, we talked about Kenfin Home and Tata Steel, which look good to us for the next week. And HUL can be the candidate which one can look for shorting. This is all from the presentation part. We'll do a quick poll for the feedback. So please fill in your feedback and then we can start with the Q&A. If you're done with the feedback, you can start posting your questions. All right, so we can start with questions now. Okay, first question on IT sector. So IT sector, it looks positive to us. In fact, IT, metal, uh, energy looks slightly stretched now. IT, metal are the one wherein we may see this, yeah, including pharma. Though we are not seeing a decisive trend in all the pharma majors, but yes, the index looks positive to us. So these are the three sectors which one can continue to look at for long trades. So in IT, our preference is like for the IT majors largely, TCS, Infosys, HCL Tech. Wipro is something that we recommend to avoid due to the prevailing underperformance, and mid cap IT is something also that we recommend to avoid because we are now seeing a bit of a breather after very sharp up move. Next, we have question on cement space. The cement as a sector is witnessing mixed trend. You know, major names, Ultratech, Dalmia, they are holding strong, but it's not a very consistent move that we are seeing in cement space. So the ideal approach is to stay stock specific within the cement. At current levels, I can recall Grasim as a candidate which one can look at, and Sri Digvijay Cement also that one can plan the trade for. Okay, next we have. Is it a good time to invest in FMCG? So stocks, obviously, we'll not talk about. As a sector, as I've said, invest, it is fine. Trading, uh, it's more likely that we might continue to see the underperformance, at least in the near future. So in case if you're planning, let's say for 9 to 12 months, yes, you can start accumulating the FMCG majors like HUL and ITC. Okay, next question from Manish on how about the auto sector. So auto as a sector definitely looks good to us, but some of the names like Bajaj Auto, wherein we have seen extraordinary move, Hero MotoCo, they are the one which might take a beater now, and the stocks which were not, in the participation earlier, Maruti and Eicher, these are the candidates that can, witness a catch-up move. So if the view is short term, the preference should be given accordingly. Okay, next question from Mr. Danish. I'm new to the stock market. I've invested in BA. It's going down. I don't mind the loss, but if there are any chances of growing it later, Mr. Danish, this is something I always recommend that if you are new to the market, first make it very clear that whether you are investing or trading. In case if you are investing, you should have rationale in place why you are investing. Investing means that somebody has said that yeah, the stock is good. It's not sufficient enough to put your hard-earned money into that stock or any other funds. If you have reasons in place that why you have invested in XYZ stock, look at the rationals. If they are valid, please stay invested. If they are not, you can exit. Since usually the rationale doesn't change overnight. So if the stock is going down and you have a threshold limit that beyond this point I'm not going to hold the stock irrespective of the rationale, in that case also you can exit. So my my suggestion is to first list down why you have bought this stock and till how long that you're going to wait for this stock to perform. Means obviously on the quantitative part. If it's just a trading recommendation that you have taken for short term, like for a week, 10 days, and it's turned southward, and now you're planning to stay invested, that's not the good trick to be in. So if you have invested from the defense point of view, as the entire space, they have done exceptionally well. So normal profit taking or decline is normal, means it's not a big thing. And there's a possibility that we might again see the buying interest emerging. But since we are into the earning season, a lot depends upon the earning announcement, basically how the stock is going to pan out. So focus on earning and list down the criteria, basically why you have invested. Railways, again, a question from Mr. Danish that is going to be good. Yes, if the long-term view is there, then definitely yes. But when it comes to buying a good stock at the right price is important. After this, 200, 300 points, 300 times kind of a move in railway counters, investing at all levels is not a prudent strategy. And so check out, on the basis of fundamental parameters, whether it is rightly valued or not, and what kind of visibility. In case if you are having a let's say 5 or 10 years kind of a time horizon, then things might look different to you. That it's still cheap and they have good project lined up ahead. So in that case, you can look at. But from the short to medium term and maybe from 1 year time horizon, the kind of move that we've already seen, it looks slightly stretched to me. Okay, no stock specific queries, please, as I've requested you earlier also. Anything which is related to any sector, definitely we can answer. All right, so others are stock specific queries largely. Thank you, Mr. Dinesh, for the feedback. Okay. All right, so yeah, with this, we have answered all the queries, I guess, except the stock specific queries. So thank you everyone for joining in. Next week, same time, we'll connect again. Till then, take care. Thank you.